All right, so in topic 4, like I mentioned at the end of topic 3, we looked at some reasons why your license might be revoked, and we looked at the interesting term unfair trade practices. So what are unfair trade practices? So this is very important, and we do need to know the 10-ish major unfair trade practices that exist. Okay. So looking at number 1 is rebating. Okay. So this is where an agent might offer a client something of value, right? Such as a portion of the agent's commission in order to induce the client to purchase the insurance policy. So why is this illegal, right? While oftentimes, right, might be misleading the client, right? Because it might be, oh, I'm going to offer you a $200 Walmart gift card if you purchase my policy or this policy, right? But that might not represent the client's interests, right? You're just trying to obtain premiums or commissions, right? So that's why this practice is often illegal. The other unfair trade practice we want to look at is defamation, right? So this is where we have someone making false, malicious, or derogatory statements against another insurer, right? So this is more about, right, one insurer making these statements against another insurer. And so the intent of this is to damage their reputation, but these claims are groundless, right? So they're false, right? And the only purpose is to damage someone's reputation. So in that case, right? So in that case, it would be illegal. Okay. All right. Now, some other unfair practices. Number 3, we have unfair discrimination, right? So this is pretty obvious, right? No discrimination, no matter if it's the insured, the insurer, the agent, right? So there should be no right, discrimination. And number 4, misrepresentation, right? So this is a term that we've seen throughout the class. And this is where one provides false, misleading, or incomplete information, right? About the terms, the benefits, or the conditions of an insurance policy, right? To an applicant or policyholder. So we want to make sure that we provide accurate information and we don't misrepresent on purpose. Okay. So now with the 5th unfair trade practice here, we have twisting and churning. And this is an interesting one. So this is regarding, and we'll take a look at this in the, I think, topic 7 here. It involves replacement, right? Because oftentimes a client might want to replace a policy. And so in this case, there are ethical guidelines that we should follow. Twisting involves when a policyholder cancels an existing policy through the persuasion of agents and purchases a new one through a different insurer. But in this case, the agent has misrepresented or omitted important facts. And in most cases, right, it causes the policyholder to cancel a pretty good policy, but the agent, right, is misleading the policyholder. Churning is similar, but it's when the policyholder cancels the policy and purchases a new one from the same insurer. Basically, on the exam, they'll probably put this like a dash, right? They're pretty similar terms. Again, the purpose is for the agent is to earn additional premiums at the sake of, right, the clients, right? Because the clients are replacing a policy that they really didn't need to replace and in the first place. Okay. So that's why you might think, right, it is an unfair trade practice. Okay. Then we also move on into here with advertising, right? So there can be advertising, right? It's all over the place, but there are specific regulations So that means, right, not making false statements, right? For example, ooh, dividends are guaranteed. Well, they're not. Um, maybe, right, making false statements about other insurers, right? Not disclosing relevant information that could influence the client's, right, the potential client's decision, right? So that would all be considered unfair advertising. We also have coercion, right? So we shouldn't compel, right? We shouldn't compel an individual to purchase an insurance policy. All right, and then our last three here is first we start with controlled business. Okay, so controlled business is where, right, you sell insurance primarily to your own family, right, or people that you associate close with, such as your employer and employees, rather to the general public. Now, the thing is that, right, selling insurance to your own family, there's nothing wrong with that. Okay, but the thing is that many states have regulations that limit the amount that a controlled business that agent can write, right? So they want to try and push you to write involve in insurance transactions to the general public, right? Instead of solely to your own family or people that you associate with, like employer or employees. Okay. Number 9, we have unfair trade practices. So this is where we look at the underwriter, right? So not only does the agent need to be careful, not only does the insurance company need to be careful, also the underwriter, right? The underwriters, right? So the underwriters shouldn't delay investigations, right? They shouldn't deny claims without a reasonable investigation, right? They should offer a reasonable settlement. They shouldn't be offering unreasonably low settlements, right? So we don't want to be engaged in these unfair claims practice. And remember, claims is, right, something that the insured files when there is an accident or health occurrence, and we took a look at all of the claims provisions when we looked at health insurance. Okay. And number 10 would be fraud, right? So fraud is the act of deliberately deceiving an insurance company for financial gain. Okay, so this could be, right, when someone submits false claims, exaggerates the extent of damages, right, providing false information on the insurance application. So, right, that would be an example of fraud. Okay. All right. So we have our now 10 major unfair trade practices, right? So let's go over them again. Rebating, right? Defamation. They got defame, right? Defame, right? Defame, damage, right? Defame. Discrimination, misrepresentation, right? Twisting and churning, advertising and coercion, controlled business, unfair claims practices, and fraud. All right. So now we're going to take a look at some scenarios, right? So on the exams, they can easily provide you with this scenario and say, what unfair trade practice is this an example of, right? That can be a question, right? They can also ask you definition questions, right, as well. Okay, so you want to be familiar with both. And hopefully by now, you're kind of familiar with the exam, right? They can ask you some definition questions, but also apply it in some sort of context, right? Which is all about what insurance is about. Okay, so go ahead and take a look at these here. Okay, kind of 5 questions. Some of them you might be 2 answers that might work. But some of them there's just one answer, one type of UTP. Okay, so take a moment to complete them, and then we'll go over them shortly. All right, so let's take a look at these, and hopefully we have some good ideas of, right, based on what we learned, we can kind of match what our unfair trade practice is. So for our first one, this should be pretty obvious, right? Applicant admits their student history when applying for life insurance to receive a lower premium, right? So definitely you can put fraud, right? Kind of you go back, right? For the false information on application. You can also put go back here, right? Misrepresentation. Okay. Now for number 2, want to look at this specifically, right? Giving the client a $200 gift card. And we know that would be an example of rebating, right? So rebating is a really common unfair trade practice that we really want to watch out for and that we want to look for on the exam. All right. Number 3, an insurance agent falsely tells a client that a competing insurance company is on the brink of bankruptcy. Wow. And won't be able to pay any claims, hoping to convince the client to switch providers. Wow. So this would be an example of twisting and churning, right? Especially churning since twisting because we have different insurers. But we do know that, right, the purpose of this is for the agent to earn additional commissions. That's also something that we want to keep in the back of our minds, right? As well. Number 4, agent persuades a policyholder to cancel the current life insurance policy and buy a new one, claiming that the new policy is better. The agent does this repeatedly, earning commissions each time, but the new policies offer no real benefit, right? So this is another example, right? This is another example that we have of twisting and churning. Now for number 3, with the agent falsely telling a client, right, that the insurance company, a competing insurance company is on the brink of bankruptcy, right? We can also include this for a part of, right, maybe the agent is engaging in fraud, right, as well. But again, some of these we can pick multiple answers as long as we know we can explain why. On the exam, right, remember they're all multiple choice, okay? But this is just a practice activity for us to get familiar with some of these terms. And number 5, right, after your policyholder files a legitimate claim, the insurance company repeatedly delays processing and denies the claim, all right, without valid reason. So this is obviously going to be unfair claims practice, right? So this one is pretty, pretty straightforward. Yeah. All right. So these are kind of our unfair trade practices